everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we take a look at our big four markets and formulate an attack plan for tomorrow's trading. Tomorrow being the 9th of the month, going on Friday. Lots of stuff going on today. We had the testimony from James Comey. We had, obviously the ECB press conference is going on all day. We had the election stuff out of the UK. Tons and tons of news just consistently coming out, and that gave the market, one of two situations: a reason to move and then a reason to stop. So that's kind of what we saw. A good early morning session. We actually had some pretty good trading opportunities today, but it quickly died off once Comey started jumping on the microphone. Once you come in early enough, you can get a couple opportunities and call it a day. Now, before we jump in, as always, make sure to swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook news. That's going to allow you to sign up your email address so that you can be notified every time one of these videos comes out. Along with the video itself, we talk about all kinds of cool stuff. Everything from stocks to cryptocurrencies to you name it, we're probably going to talk about it in the newsletter. So a great newsletter to get your hands on if you haven't done so already. Also, don't forget, at the bottom of the page, we have two different posts that we do every day. One right in the morning before we come into the room, and that's the live trader morning prep levels. Those are the major levels of support and resistance for that day. And then in the afternoon, we go over either a trade example or we cover the market psychology of a specific move or a specific day. So a really good video series to get your hands on there as well. Don't forget to click on the live trade room subscription and trial info if you haven't done so already. That will allow you to sit in on a one-day trial, so you can sit down with us, see what we're all about, and kind of hang out with us for the day while we're trading. And you can get a feel for what we do every day, even if it is a little bit slow. We still find things to trade, and we cover a lot of different markets. So a great way to see what we're all about and see if we're a good fit for you. Of course, if you do enjoy it, you can sign up with a subscription for weekly or monthly. And then, of course, if you join as a full-fledged VIP member, you get that live trade room as part of the package. Now, taking a look at the overall movement that we have here, the euro is, for the most part, bear trending. It really kind of picked up the pace here right after around 5 o'clock. Now, keep in mind, we did have the ECB press conferences today, as well as the UK election stuff. I personally didn't trade the euro at all today. I completely ignored it. It's not worth the risk for me when I'm looking at that kind of market volatility. And from the looks of it, it's a pretty good thing that we chose that route because it did get pretty choppy, sloppy inside here. Overall, though, looking at the benefit of hindsight in this case, we have a nice bearish trend working its way lower. Lots of wick attempts at the highs. That said, lots of wick attempts at the lows as well. Mostly paying attention to the bodies of the candles, we can see that we have a fairly nice, solid bear trend working its way lower until more recently, where we've started to catch a little bit of a correction, maybe a little bit of a wedge, something along those lines. Now, the general trend of things is still down in the short term. If we zoom far out, we can see that for the most part, we're just in a big old range right now. If we have to go out to a 60-minute chart, we can see that we have a nice bull trend. That bull trend has been stagnating for quite a while, having a really hard time at the highs and the lows, and not really getting away from that area except for one time, and then it completely took it all back. So pretty obvious that the buyers in the bigger picture own the market, but as we can see on the faster time frame, we're pretty much stuck right at the bottom of a very large, well-defined range low coming in from a couple days ago, and every time that we're down here, we find support to push the market back up, and they're usually pretty aggressive about it on those drives higher. If this support below us does break, and we're talking 12.068 down to 12.020, then we have a chance at running for the overall lows, which are going to be down here just above 11.700 and then down at 11.200. The big one, obviously, the 11.700 area. That's where the market really kind of propped itself up for quite a while going into more recent time. But if they want to trap the major lows, then you've got that 1220 area. Now, the overall, bias is still definitely down. I'm looking for selling opportunities, but I want to sell high. We have that range bias on our hands, I really want to be looking for selling at better prices. So I'm looking at 12.315, 12.365, 12.455, and then all the way up, if they want to give it to you, at 12.585. Those are all potential selling areas for bouncing. And again, if we can come back down to those lows, we do have that longer-term trend kicking in for possible buying pressure off of the lows to maybe hang on for a couple days. That might be a next week option kind of play for a potential opportunity to hang on longer. Now, looking at gold, we have a very similar situation, except gold was drastic on that drop lower. That drop lower was ridiculously powerful, pushing into monthly support at 77.1 and even breaking through it a little bit. Now, the overall trend here as well, if we zoom really far out, we can see this is really just a big pullback to that beginning point of the spike in channel. We talk about this a lot. We have that big spike up, we go into a channel, the market loves to come back down to those spike in channel start points, and that is what we had today. We have that big spike in channel starting point, we tested it today, and the buyers made it pretty obvious in what their intent was. Now, the grand scheme of things, we do have a possible 3-push wedge bottom with an exhaustive ending that is a good sign for the buyers to potentially come in for the long term. We also have a possible wedge forming off of the top. So a lot of things really kind of pointing to the upside right now. We have a big blow off through the lows. We tested major monthly support. We also tested the spike in channel starting point. We got a lot of areas of support, not to mention the blow off of the lows. Chances are we're looking for a blow off of the highs, and that could put us right around that 1291 area in the next day or two. Now, where are we looking to buy? I would love to see a pullback back down to around 78.3, 77.1, back to that monthly support again at 76.8 would be nice. 75.5, anywhere inside of that area, this zone is going to be a nice potential long-term play for that upward move. Now, in terms of the short term, we do have that falling area of resistance coming down on price, and the buyers are going to have to break through that as proof before we can start really looking to rocket the market back to the upside. A couple areas of resistance to look out for: 82.5, 84.5, and 87.6. Almost at a half again. 87.6 up there. There are a couple levels that the buyers are going to have to work through, but overall the long-term trend really lies in favor of a buy back up towards the highs. Crude oil today, as anticipated, after a big moving day, went into a range. Really didn't have a whole lot. They had a quick drive lower right at around 7 o'clock, but then they took most of it all back, right back up to that 46.14 starting point where they kicked the move down in the first place, and we're just kind of stopping in the middle. We opened up here, and we're going to be closing here. That really leaves us with a pretty ugly daily candle, right, on the lows and on the highs. We're pretty much just stuck, right? We have a bare body, but not much of a body at all, and mostly just a bunch of wicks. So we're kind of stuck with this candle of what you would expect to see after a big bear drive lower from the prior day. Now, overall, the bigger trend is still definitely down and it's still grinding lower. We have every reason to want to sell, and today might have been the better chance to possibly sell at a better price at least. Now, if you notice, we had that really thick line down there, 44.81. We have open downside objectives for the sellers to drive down to that are still open from yesterday's massive inventory flop that we had back lower. So we do have a lot of sellers that are still interested, that are still probably scaling in on a day like today, and are still looking for downside objectives to 44.81 at the very least. So it does open the door for the sellers to continue the drive lower. I wouldn't mind necessarily seeing a push back up to 46.14 for selling. Chances are we might not get that opportunity, but for the most part, we have a little bit of a wedge. Not exactly the prettiest looking wedge in the world, but we can see a nice little wedge forming. In all honesty, I would love to see a bull breakout to the upside, a big strong bull bar, just to trap in buyers so that we can sell into it and drive the market right back down again. So that's kind of what I'm looking for. In all honesty, I would love a trap to sell into. A couple areas of support that are in the way of the sellers to try to work through: 45.40, 33, and 28 below us. The sellers are going to have their work cut out for them because that is relatively stacked up. So if they can work through that, then we should be able to find a retrace and then a push back down to finish that objective. Either way, looking to sell, it's just a matter of how the market wants to let us into the sell to try to drive the market down. And then finally, the S&P, another wonderful range day that we have on our hands here. Not really a whole lot has happened today on the S&P, a lot of back and forth. For the most part, again, zooming out, we have a strong daily bias. And yesterday's dip to the lows was that trap that we were talking about. 3-push wedge bottom, trap low, everything looking good to the upside. And today, they almost got that new high. They missed it by just a little bit. 24.39 3/4 is that high that the buyers are going to be kind of hunting out. But in the meantime, we're we're still stuck in a range. The range lows, very obvious cutting across the lows. 29.25 down to 29 even, all the way down to potentially a good area of support at 28. So kind of that 28 to 29 zone seems to be about where the buyers stack in every single time we dip down here. Every time, right? Every single time. So that is a big area of interest that we have to keep our eyes on, not to mention the fact that the highs are relatively stacked up as well. We have a pretty strong area of resistance from, 24.36 and 3/4 up to 37 and 3/4, maybe a little bit above that to 39 and 3/4 overall highs. But again, that zone up here is an area of interest for sellers. So we're just kind of battling between the low edge and the high edge, and right now we're smack in the middle. So what do we do with ranges? We're looking to buy low, sell high, stay the heck out of the middle, and right now we are smack in the middle. So it's going to be sitting on hands time. We'll wait for the extremes to test, preferably on the buy side. I would much rather be a buyer with a longer term emphasis pointing up, but until we get some movement to an area of interest, we're just going to have to sit and wait. So that's going to do it for the outlook. Now, in terms of the news calendar for tomorrow, not as extreme as today, but out of the UK at 8:30, we have the manufacturing production month over month for April, forecasted at 0.9%. The previous was negative 0.6%. At 8:30 tomorrow in Eastern Time, out of Canada, we have the employment change, forecasted at 11.0 thousand. Previous was 3.2 thousand. And you'll notice, once again, no real big news for the U.S., nothing really major happening there. So going into a Friday, the weather's nice outside, hopefully, for you. I know it is by me. And, well, when the weather's nice, you're going into a Friday, and it makes for a really good excuse to leave early. So keep that in mind going into tomorrow's price action. Might be an early in, early out kind of scenario where traders are coming in early, getting the trades on and off the table, and then leaving for the day and heading down to the beach. Overall, though, that's going to do it for this one. As always, just be careful out there. The markets are very volatile. We're getting all kinds of different news going on, and it seems like every day something new is coming up. So we have to play it safe, even if we are going into that Friday situation. You just got to play it safe. And like we always say, make the plan, trade the plan, follow the rules, and you'll do A-okay. Until next time, we'll see y'all then.